Good morning, traders, and welcome to Phoenix Blues Morning Update. Hope you're all very well this morning. My name is Nishal Patel, and I'm going to be conducting today's update, giving you a brief synopsis of what's happened in the market yesterday and what we should be looking forward to today. Today's Thursday, the 3rd of March, and we're going to get stuck straight into the news announcements for today and then focus on what happened in terms of the data and the news that was released yesterday and the impact it had on the chart. So looking firstly at cable or sterling, I should say, we've got PMI, construction PMI data coming out at 9:30 a.m., followed by GDP data on the Canadian dollar and the fortnightly unemployment claims at 1:30, so just after midday here in London. We have had GDP data out already from a few countries, which we're going to speak about in just a moment. But fairly important data coming out, in particularly 9:30 with sterling, because the data we've had out so far on sterling hasn't been favourable on it, and we'll have a look at that in just a moment. So let's flick straight over to our charts and let's have a look firstly at the euro. So having a quick look at euro right now on the weekly time frame, euro is floating at 1.536. So definitely down. Remember, this is a weekly time frame. We see that this week we've come up and hit that high, which we will be able to see and will be very evident on this daily time frame that we're going to move over to next. We can see at the start of the week we did hit that high, almost intersecting with my 50-day moving average there, and then rebuffing straight off that and coming a lot lower. Now, euro has literally taken a bit of a knock, and that really is the gradual strength on the greenback or the US dollar coming about, and we've seen that across the board, no doubt. For you guys that are trading the majors and minors, or at least viewing them, you should be able to see that. Having a quick look right now at the Japanese yen, we can see that the yen is floating quite high, rebuffing off the lower levels around the 111, 111.80. So we've got 111.70, 111.70, 111.80 was a key area for us, and almost doubling or bottoming out. And as we can see, just supporting itself on that 100-day moving average on this time frame. Right now floating well above 114. Did stagger yesterday just below that 114 level, as we can see highlighted by this pink horizontal across our charts. So we can definitely see the strength of the USD, and we should be able to see a true reflection of that looking at the dollar index right now. Dollar index floating at 101.85, really looking strong. Third bullish day in a row, and most certainly I would say off the back of Monday's slightly uncertain slightly uncertain outlook on the USD has started to pick up some momentum. Let's please note that on the Tuesday we did have a little seesaw effect represented by this low test bar on the current chart. And let's also not forget that we did have President Donald Trump speaking very late at night for us here in London, and most certainly in the evening in the US, and speaking to Congress. So that obviously had a knock-on effect straight onto the indexes. And if I just bring up an index for us, we should be able to see the effect that it most certainly had on not just the US equity markets, but equity markets worldwide. We've most certainly seen an uptake on stocks after quite what I would say a few days of bearish movement, or most certainly a pullback. We'll have a quick look at our blue chip index, the FTSE 100. First, and as we can see, the FTSE 100 on this daily time frame well above 7,300. We see it had a very strong rally off the back of yesterday, and still on pre-market trading right now. Still is floating quite high, obviously taking out the previous highs that we had just below just below where we would call we would call its market threshold, and doing very well. And the S&P, the Dow Jones have also picked up. In fact, what we'll do is we'll just move straight over to a commodity rather than us mess around on some of the equities. But I think the markets, just before I continue with the commodities, a note of caution, the markets are very, very skeptical of this rally right now. They're very cautious. The sellers are in town and they still are looking to sell off certain equities because what they're looking for from the president right now is a guarantee of that effectively economic stimulus that he's planning. Most certainly what they're looking for is clarification on the deregulation of certain industry, and most importantly fiscal reform on their side. So looking at the taxation side of things, and thus probably a continuation of this bullish run. But if the markets don't see any clarity on either the deregulation or the fiscal reform, so in this case our taxation, as I was saying, then we should probably expect to see some sell-off. Now, just having a quick look at WTI right now, we did have the weekly crude inventories out from the US. Remember that the US is the largest consumer of petroleum products, and inventories again were high, slightly short of their expected, but still nonetheless fairly high. Slight pullback off that because of the inventory data, but still trapped within this range, as we can see right now. General highs are just above just under the 55 range. Most certainly settling in and around the 54 and the high 52s or the mid 52s, as to speak, and really in a very tight trading range. OPEC and its constituents are really keeping to their proposed plan of output cuts. From what we've heard so far, it's not across the board, and not every member of that cartel is adhering to on their output cut, but are planning to. In turn, what's happened is a few of the key players, including Saudi Arabia, have decreased production dramatically just to help out other incumbent members. So that's a word of note. Moving straight on to another commodity, we're going to have a quick look at the price of gold. We see gold still floating just under 1250. So right now floating at 1243, coming up and testing this long-term trend line that I've got on my chart right now, and literally breaking through it and then retesting it. Retested it yesterday, low test off that. Probably looking for more of a pullback and slightly more bearish movement on gold, especially if we are looking at continued dollar strength in the up and coming weeks. We are in March right now, so what that does mean that we do have the Fed potentially looking at their rate policy later on in the month. With the data that's come out so far, it looks very certain that the Fed would be increasing rates later on this month. Also, let's not forget they're also going to be factoring in the stimulus package, effective economic stimulus package that Donald Trump is going to be bringing in, and the certainty of that, also the timing of that. I'm most certainly going to be looking at, but they're going to be preemptive from what the market is saying, and most certainly what key officials out in the US, including Williams and Dudley, are saying so far about how the reactions of the Fed will be. I think we will most certainly see a rate hike, but that will be dependent again on non-farm payroll, so the employment data that comes out, which we're going to see. I think if we do have bad data, then I don't think the chances of a hike are imminent. But if we're going to see that continued strength or the good data coming out from stateside, and particularly from in terms of the jobs numbers, then the likelihood of a rate hike would be quite strong, I would think. So if that is to play, then we're probably looking for more of a bearish outlook on gold, and probably looking for a break in cyclicity of this, maybe seeing a reversal pattern come into play. So keep your eyes glued to this chart, most certainly. A big talking point from yesterday was the state of play on cable. I'm just going to flick straight over to a daily time frame here. After it topping up, we've seen very, very strong bearish moves on cables. We can see here it is losing a hell of a lot of ground versus the greenback. Right now floating at 1.2291, moving very, very quickly to that 1.2 marker, which I think the markets again are looking at to be a fair reflection, especially with the political setup with sterling. We did have data out yesterday on cable. It was not favorable on the British markets, and the data is literally showing that effectively the Brexit vote is catching up with the economy here in the UK, and that's obviously having a knock-on effect onto sterling. There has been a lot of uncertainty with Brexit. House of Lords have effectively rejected the plea on the Brexit plan. That's the first initial one that kicked up at the start of this week. Obviously, that gives that uncertainty to the sterling as well. So GBP not looking too good right now versus the greenback, and most certainly is looking very bearish. So again, trading wise, there's only one direction anyone should be trading this in the short term imminently, and if we do see that rate hike later on this month, then again that's going to factor in and pretty much dent cable right now, especially after that strong pullback that we saw in early January, pulling back to the high high 1.2s, so, or the mid 1.2s I should say, to the 1.25 level, and falling off that, just supporting itself right now. Moving on to the next chart, the Australian dollar, we have had a GDP out. GDP is 1.1% Q on Q, so 1.1% growth off the last quarter, which was to a certain extent predicted. There was a prediction of an increase from the last quarter, and most certainly year on year. Growth in Australia does look good, but that being said, in Australia right now, we haven't had copious amounts of good data out. In fact, we've had effectively weak. I would say it's slightly weaker than expected, barring GDP figures. We did see a drop. Looking at the Australian dollar, and most certainly looking at these highs here. Remember, just on a technical perspective, trade effectively at the high of this trading range that we've seen, or the development of, over the course of almost a year right now. So we can see the last time it was in that trading range, as we can see, was back towards the summer of 2016, again the spring of 2016, and then the last time prior to that was the summer of 2015. So back into the highs of that trading range, literally rebuffing off that 77 or low 77 zone on the Australian dollar on this weekly chart. As we can see, price actions giving us this rejection of that area, of that price zone. And one thing we should also talk about is the state of play of the economy. We have spoken about GDP, but trade surplus has shrank somewhat in January, which has obviously dented the Australian dollar, and as we can see, has dropped somewhat. is effectively still very much range bound. We can see that the strength of the dollar has played a part, but not huge movements, especially after this daily chart topping out twice. One could classify that as a double top. I wouldn't say it's a clean double top by any means, but it's topping out and slowly making its way down to that 7600 area. There is a key level at that 7600, 7590 area. So there's definitely a zone. Moving on to the final chart that we're going to be looking at today. Just having a quick look at the Canadian dollar. So if I just pull that onto my screen, like so. Just having a quick look at the Canadian dollar, as we see again, very similar to cable in the respect that it shows very evidently the strength of the greenback versus this particular currency. We can see the Canadian dollar is losing a lot of ground in this, most certainly in this bearish direction right now, pulling off the lows of 1.3070 area, and right now floating at 1.3360. So just floating in and around that zone off the highs that we saw back in back early in January, or mid-January, I should say, around here. In fact, it looks like the 20th. We did have the rate announcement come out from the Canadian Central Bank. There is no change on their rate. Most certainly, they're going to be looking at policies and policies from their neighboring countries, in particular the United States, to see where the greenback starts moving, and then most certainly we probably will see some movement on their side. But that being said, the Canadian dollar, with where it's at, has been fluctuating somewhat, but no steady and strong movement in a direction, as we can see on this weekly time frame. We see a gradual rise and decrease of the Canadian dollar, and we can see over the last year or so, it's stayed very much in a trap of a trading range. So guys, that's me done for today. Until next time, I look forward to any questions that you might have. Until then, happy trading. Goodbye.